to all. I am VIJAYALAKSHMI, lecturer in commerce, VOC Government Higher Secondary School, Puducherry. Today, we shall start our lesson 12th Standard Accountancy. The first unit, Accounts from Incomplete Records.
Statement of affairs. What is statement of affairs? Statement of affairs is a statement showing the balances of assets and liabilities on a particular date. It is prepared from incomplete records to find out the capital of a business unit on a particular date. The balance of assets are shown on the right side and the balance of liabilities on the left side. This statement resembles a balance sheet. Although the statement of affairs is a list of assets and liabilities, it is not called balance sheet because the values of all assets and liabilities shown are not fully based on the ledger balances. Some items are taken from accounts maintained, some items from relevant document, and some balances are mere estimates based on memory. The difference between the total of assets and the total of liabilities is taken as capital. If the statement of affairs is prepared at the beginning of the year, we may be getting opening capital. On the other hand, if the statement of affairs is prepared at the end of the year, we may be getting closing capital. Now, let us look at this formula. Capital is equal to assets plus liabilities. Capital is equal to assets plus liability. Based on this only, we are going to do our statement of affairs problem. Now, let us see what are the differences between statement of affairs and balance sheet. There are some 5 differences between the statement of affairs and balance sheet. The first one is objective. The second, on the basis of accounting system. Third, basis of preparation. Fourth, reliability. And fifth, missing items. When you look at the objective, statement of affairs is generally prepared to find out the capital of the business. On the other hand, balance sheet is prepared to ascertain the financial position of the business. When coming to accounting system, statement of affairs is prepared when double entry system is not strictly followed. On the other hand, balance sheet is prepared when accounts are maintained under double entry system. Basis of preparation. Statement of affairs is not fully based on ledger balances. Wherever possible, ledger balances are taken. Some items are taken from source documents and some items are mere estimates. On the other hand, balance sheet is prepared exclusively on the basis of ledger balances. When coming to the reliability, statement of affairs is not reliable as it is based on incomplete records. But balance sheet is reliable as it is prepared under double entry system. When coming to the missing items, statement of affairs, it is difficult to trace the items omitted as complete records are not maintained. But in the case of balance sheet, since both the aspects of all the transactions are duly recorded, items omitted can be traced easily. These are the 5 bases of distinction between statement of affairs and balance sheet. Now, let us look at the format of the statement of affairs. See, this format looks like a balance sheet. On the right hand side, you write all the assets and on the left hand side, you write all the liabilities. What are the assets? Cash in hand, cash at bank, sundry debtors, bills receivable, stock in trade, prepaid expenses, fixed expenses. All these assets you will write on the right hand side. On the other hand, in the left hand side, you will write all the liabilities, sundry creditors, bills payable, outstanding expenses, bank overdraft, capital. That will be your balancing figure. You will write all this. You will then balance the account. Then you will be getting the capital as the balancing figure. If statement of affairs is prepared at the beginning of the year, we will be getting opening capital as the balancing figure. On the other hand, if statement of affairs is prepared at the end of the year, we will be getting closing capital as our balancing figure. Good. Now, let us look at illustration 6 given in page number 10 of your accounting textbook. I will read out the question. Following are the balances of Shanti as on 31st December 2018. Some particulars are given to you. I will read out. Bills receivable. Bills receivable is given as how much? 6,000. Bills payable 4,000. Machinery 60,000. Furniture 10,000. Sundry creditors 25,000. Stock 45,000. Debtors 70,000. Cash 4,000. From this, we have to prepare a statement of affairs as on 31st December 2018 and calculate the capital as at that date. Got it? Now see, we have to find out what? We are asked to find out capital. So what we have to do? We have to prepare a statement of affairs. First, we have to start the answer by writing in the books of Shanti. See here, we have to write like this. We have to write in the books of Shanti. Because here the name is given. So we have to write like that. In the books of Shanti, statement of affairs as on 31st December 2018. Statement of affairs as on 31st December 2018. See here. Now this statement of affairs is similar to that of your balance sheet. On the right hand side, you will be writing all the assets. On the left hand side, you will be writing all the liabilities. So, you have to write the heading first. On the right hand side, you write assets, rupees. On the left hand side, you write liabilities, rupees. Then, start with going through the problem. Now, let us see what are the assets and what are the liabilities. Bills receivable, it is what asset or liability? Asset. Bills payable is a liability. Machinery, asset. Furniture, asset. Sundry creditors, liability. Stock, assets. Debtors, asset. Cash, asset. So, now we have found out what are the assets and what are the liabilities. Now, we will write all the assets one by one here on the asset side. First, let us start with cash. Cash, how much is given? Cash is given as rupees 4,000. So, we are writing here 4,000. Then what we have to write? We have to write stock. Stock is given as how much? 45,000. So we shall write stock 45,000. Then what we have to write? The assets, debtors 70,000. So we shall write here debtors 70,000. Then see, this sundry creditors is a liability. So we will leave that now. Bills receivable is an asset. So we are writing that as 6,000. See, the amount is given as 6,000. So, we will write here 6,000. Bills payable, it is a liability. Now, machinery 60,000 asset. So, we will write here machinery. How much? 60,000. Then, furniture is an asset, 10,000 rupees. We will write here furniture 10,000. Got it? See, cash, stock, debtors, bills receivable, machinery, furniture. All the assets we have written on the asset side. Now see, what are the items that have to be written again? Sundry creditors, you have to write. This is a liability. So, we will write on the liability side. Sundry creditors, how much? 25,000. Now, what are the other liabilities? Bills payable. Bills payable, how much? 4,000. We will write here. Bills payable, 4,000. Now see, almost all the items we have written. See here, there are some 1, 2, 3, 4, 5, 6, 7, 8. So, we have classified the assets and we have written that on the asset side and the other things on the liability side. We have written everything. Now, we have to balance. See here, 25,000 plus 4,000, only 29,000. But here, you have got a greater amount. So, you have to add all these amounts. So, what is the amount? It is 95,000, 4,000 plus 45,000 plus 70,000 plus 6,000 plus 60,000 plus 10,000. When you add everything, you will get 1,95,000. This is a greater amount. So, you will be writing here also 1,95,000. So, what is the balance that is missing here? Something is, we have to write as a balancing figure. What is that? 1,95,000 minus 29,000. 1,95,000 minus 29,000 is 1,66,000. This is nothing but what? Capital. So, capital is 1,66,000. This is how we have to prepare capital. If we are not given capital, we are given some assets, some liabilities. We are asked to find out capital. So, what we have to do? We have to prepare statement of affairs. We have to identify all the assets and write them on the asset side. We have to identify the liabilities and write them on the liability side. We have to see which total is higher. The asset side total is higher. So, we are writing it on the liability side also. Then, we are arriving at capital as a balancing figure by minusing 1,29,000 from 1,95,000, which comes to 1,66,000. Now, let us look at exercise 6, page number 32 of your textbook. I will read out the problem. Following are the particulars in the books of Thomas as on 31st March 2019. Some particulars are given to you. We will read out. Sundry creditors 6 lakhs. Furniture 80,000. Land and building 3 lakhs. Sundry debtors 3,20,000. Bills payable 1,20,000. Cash in hand 20,000. Bills receivable 60,000. Stock 2,20,000. Prepare a statement of affairs as on 31st March 2019 and calculate capital as at that date. Now what we have to do? First we have to identify what are the assets and what are the liabilities. See here, sundry creditors, what it is? It is a liability. Furniture, asset. Land and building, asset. Sundry debtors, asset. Bills payable, liability. Cash in hand, asset. Bills receivable, asset. Stock, asset. So, we have identified what are the assets and what are the liabilities. There are only two liabilities in this problem. Sundry creditors and bills payable. All the other things are assets. Now, we shall start writing the answer. See here Thomas is given in the books of Thomas. So, we should start writing the answer like this. In the books of Thomas, statement of affairs as on 31st March 2019. Why we are preparing statement of affairs? Because some assets and some liabilities are given and we are asked to prepare capital. So, for that we have to prepare statement of affairs. You know, statement of affairs resembles a balance sheet. On the right hand side, you should write assets, rupees. On the left hand side, you should write liabilities, rupees. Now, let us see what are the assets here. First, sundry creditors, it is a liability. We will write later. Furniture, asset, 80,000. Now, we will write here furniture, 80,000. Okay. Now, see, land and building, it is an asset. 3 lakhs. Land and building, 3 lakhs. Now we will write here in the asset column, land and building, how much? 3 lakhs. Okay. Now sundry debtors, it is an asset. Sundry debtors, 3,20,000. We will write here, sundry debtors, 3,20,000. Okay. Bills payable, it is a liability. We will write that later. Cash in hand, what is it? Cash in hand is a asset. Cash in hand, 20,000. Now we will write here, cash in hand, how much? 20,000. Okay. Bills receivable, 60,000. Bills receivable in the asset side, amount is 60,000. Then what is it? Stock is an asset, 2,20,000. So we will write stock in the asset side, the amount is 2,20,000. Now we have written all the assets. Now what is pending? We have to write the liabilities. Sundry creditors 6 lakhs. It is a liability. We will write on the liability side sundry creditors. How much? 6 lakhs. Then what we have to write? Bills payable 1,20,000. Bills payable, it is a liability. So we will write in the liability column bills payable. How much? 1,20,000. So we are writing 1,20,000. See, we have written all the assets and all the liabilities. Now we have to balance it. See here, in the liability side, we have 6 lakh plus 1,20,000, 7,20,000. But here, you have some greater amount. I think this side will be greater. So, we will balance it. When we balance, when we total everything, we will get 10 lakhs. 80,000 plus 3 lakh plus 3,20,000 plus 20,000 plus 60,000 plus 2,20,000. When you add everything, you will get the total as 10 lakhs. So you write this total here also. Now some amount is missing here. Some amount, what is that? 10 here when you add these two, how much? 6 lakhs plus 1,20,000, 7,20,000. Now you have to minus 7,20,000 from 10 lakhs. 10 lakhs minus 7,20,000. You will get what? That will be your balancing figure. That is nothing but 2,80,000. How you got this 2,80,000? Here you have 10 lakhs as the total. Here you have only 6 lakhs plus 1 lakh, 7,20,000. So 10 lakhs minus 7,20,000, you will get 2,80,000. That is the balancing figure. This balancing figure is nothing but capital. So the capital amount is rupees 2,80,000. When you are given some balances of assets and liabilities, and when you are asked to find capital, you have to prepare the statement of affairs. You have to write the assets on the right hand side and the liabilities on the left hand side. Identify all the assets in the problem and write it on the asset side. Identify all the liabilities and write that on the liability side. Then balance the account. Then you will be getting capital as your balancing figure. Like this we have to do the problem. Okay.
Revise again and again and practice repeatedly. Good luck.